Hi students, welcome to Commerce Veda. Again, in the previous session on amalgamation, I discussed a lot about what is amalgamation and what are the steps when we look at the amalgamation question in the examination. What are the steps to be followed and what are the flow of accounting to be done? Like number one is computation of purchase consideration. Number two is closing the books of amalgamating company, and number three is incorporating the assets and liabilities taken over in the books of amalgamated company, and number four is preparation of balance sheet right after amalgamation. Now, the first and foremost important topic is of purchase consideration. Now, what is actually purchase consideration? It says the price payable to the shareholders of the amalgamating company. The price payable to the shareholders of the amalgamating company. Here, it includes consideration in any form, such as shares, cash, debentures, etc., payable by the amalgamated company to the underline the word shareholders, to the shareholders of the amalgamating company. See here, the important thing is consideration in any form, such as what? Such as what? Shares, cash, debentures, or any other securities payable by the amalgamated company to the shareholders of amalgamating company. We can say by the transferee to the shareholders of the transferor by the transferee to the shareholders of the transferor. Here, now, why I stress the word shareholders here? Here, shareholders means equity and preference. So, any price, any consideration in whatever the form payable by the transferee to the shareholders of the transferor. The important word here is shareholders. Why I'm stressing again and again here means purchase consideration doesn't include any amount paid or payable to debenture holders, lenders, or trade payables, creditors, or for expenses on realization, purchase consideration doesn't include any amount paid or payable to the debenture holders, lenders, debenture holders whom of transferor, lenders of transferor, or creditors of transferor, or expense or for expenses on realization. So any amount paid to other than shareholders is strictly, specifically excluded from the definition of purchase consideration. So if any amount paid by the transferee to the creditors of transferor, to the debenture holders of transferor, or for realization expenses, that shall not form part of purchase consideration. This is very, very important. So only the payment, whether paid or payable, to the shareholders, only to the shareholders of transferor is considered as purchase consideration. So we should be very, very clear on this. The first definition itself clearly says purchase consideration means amount in any form or consideration in any form, paid or payable, to the shareholders of the transferor, by whom? By the transferee. So the important items we should say is what is called PC, who are shareholders, and which is not included in purchase consideration. These things should be very clear. Now it is fine. Now how do we compute? Now the computation technically says two methods. Two methods. You can call 100 methods, but ultimately they end up in these two. Number one is net assets method. Number two is net payments method. Now, why two methods? How can I identify which method is to be applied in the question for the solution? Now, say suppose if quantity of shares and price of shares and quantum of cash are specifically available. It means I'm saying that 1000 shares of 100 each and 2 lakhs cash. So here the quantity of shares is available, the price per each share is available, and the cash is also available. Everything is told. What I am paying, how much I am paying, how I am paying. All the information is there. Then you should use net payments method. So the question gives you this many number of shares at this price, this much of cash, this many number of debentures at this price. Shares or securities, I can say. Now, if it is clearly available that what the transferee is paying to the transferor in terms of the quantity of shares, number of shares and the price of shares, number of debentures, price of debentures, and the cash. Nothing is to be identified separately or missing. In that case, the method should be used is net payments method. And in the absence of any information needed for net payments method, in that case we should use net assets method. Here number of shares is not given. It says 80,000 cash, balance in shares of 100 each, or it says 1 lakh cash, balance in shares of 150 each, or 10,000 shares of 100 each and the balance in cash. So some amount is not clear, some portion is not clear, some element is not clear to compute net payments, then we should do it in net assets method. So it is all about how do we identify which method is to be applied. So if everything is clear, number of shares, the price and amount of cash is totally available, then the method should be applied as net payments. If any information is absent or not there, for which you can actually opt for payments method. If any information is not there, then you have to identify the consideration. In that case, you should apply net assets method. Now, what is net payments method? Net payments method. You should compute like this: number of equity shares into price per share number of preference shares into price per share, number of other securities, see, payable to shareholders only, right, into price per security and cash agreed to pay. This is all put together is called purchase consideration. So payments method is quite simple. You're identifying how many shares at what price, how many other securities at what price, and how much cash. So very clear. Then it is net payments method. Now when it comes to net assets method, we should see net assets taken over at agreed values. It means assets taken over such as asset 1, say plant and machinery, asset 2, say land and building, asset 3, say stock, asset 4, say debtors, trade receivables, and asset 5, any other assets. So the assets taken over at what values? Here the important term is agreed values. the assets taken over at agreed values less liabilities taken over again at agreed values. What are those? Trade payables, debentures, other liabilities. So if I call it as A and B, now your purchase consideration is A minus B. That is nothing but net assets taken over. So you need to see what are the assets agreed to be taken over at which values. What are the liabilities agreed to be taken over at which values. So those values you need to take it into account and add the asset value taken over and add the liabilities value taken over, and the difference is called as net assets taken over, or we can call it as purchase consideration. So purchase consideration needs to be understood that it should be only the payment made to shareholders of the transferor by the transferee. Here shareholders means both equity as well as preference, right? Generally we should see, sir, generally we call members as equity. Yes, equity are members, but shareholders means both. Holding preference shares, holding equity shares are called shareholders, and the definition says consideration in any form paid or payable to the shareholders of the transferor company is called purchase consideration. It specifically excludes any payment made to debenture holders or creditors or lenders, or for expenses on realization, expenses to make this process happen. Any amount paid by transferee to transferor to take care of the assets, expenses on realization, that is also not a part of purchase consideration. And the purchase consideration can be computed in two methods. One is net assets and the other one is net payments. If information is very clear, rightly available in the question about the number of shares and the price and the cash balance, about the number of securities and the price, in such case all information, they simply multiply the number of shares into the price, the number of securities into the price, and the total cash agreed to pay. If you aggregate everything, that is called net payments method, and the total is purchase consideration. Whereas if any information is missing, like neither the shares data available or the price or the cash balance, then we need to compute the net assets, and then the net asset value is called purchase consideration. Then you divide that into number of shares and price and cash. So this is all about understanding the purchase consideration as a whole. In the next topic, in the next session, I'll be doing a sum from net assets and from net payments, so that the clarity on purchase consideration, the computation of purchase consideration can be understood in detail with the help of a solved practical problem. For now, signing off. Thank you.